Welcome back to the Wisdom Lifestyle Money Show. I'm your host, Scott Dillingham. I've got an incredible guest who has an awesome story. Her name's Araceli. She's going to touch on how she went from being in Canada to a full-time investor, working in the States, doing all these things. And you guys have to hear her story. And she's going to share also how you can get involved, which is super cool. So welcome. I hope I said your name correctly. Did I?
That is correct. Thank you so much, Scott.
Okay.
Because
You're welcome. Just want to
most
make
people
sure.
can't pronounce it right.
Yeah. So thank you. I'm glad. So yeah, let's hear your story. So I mean, starting in Canada, I'd love to hear kind of how it transitioned into the States and, what you've built up over there and just, like what's going on.
Well, I'm going to give you kind of like the 5 minute version of it. I am a mechanical engineer by profession, and I work in the aerospace industry for 17 years. But like any job, like my job was really good, but it always has a ceiling, not a lot of time, lots of responsibility. And I think a lot of people can, feel the same way about their job, whatever the job is, right? Doesn't matter what it is, whether you like it or not. So the thing that triggered everything is when I got divorced. So now you have two incomes, and all of a sudden you lose one and the bills are still the same. So not enough money. Doesn't matter. My job paid really well, but it's still, I didn't have a lot of time and not enough money coming in. So the first thing that I did is I basically was looking for something that could help me pay for a portion of my rent or my mortgage. And I found a property in Hamilton, Ontario, and I divided up property in 3 units. And I had no idea what I was doing at that time at all, but I just wanted to have some kind of income coming in. So I learned a lot about contracting and things that we needed to do in order to get it going. I finally finished that house in 2016. So I bought it in 2014, 2016. By the time I had 2 renters, I was living in one of the units. Everything was paid for, and I was taking home about $400. And
Nice.
that's something kind of clicked, and I said, hold on a second. I live rent free, and I'm taking home $400, right? So that was kind of a dream for me. I didn't really expect to get those results, and that was fantastic. But in 2016, well, after 2014, everything has started to go up in Canada, like dramatically. Sometimes they had offers $50,000, $75,000, even $100,000 over asking. So I said, okay, I can't keep up with this. As soon as I was ready to buy another property, I was looking, and nothing like I had existed anymore. So I bought the property at that time for $180,000.
And that's in Hamilton?
Yeah, anything.
Okay.
Anything that was similar condition for me to rehab and get tenants in, I couldn't find it anymore for less than $300,000. So with those numbers, now the cash flow wasn't there anymore, and I had to put out of my pocket. So I started looking, and I went to different meetings and talked to people. Where can I go? I, go to St. Catharines, Niagara Falls, and so on, to see if there was something similar. Because the first property really showed me a whole lot of things about cash flow, what kind of numbers I was looking for, and so on. And then somebody told me, says, well, have you ever looked at buying it in the US? And I said, well, no, I know nothing about the US at all. But what clicked to me is that when I was working as an engineer, I worked in Cleveland for 6 months. So I knew the area a little bit, not much. And then he said, well, can you take a look at Cleveland? And I said, okay. So when I was there in the 2000, the city was really in bad shape. And I said, I don't think so. I think that's a pretty bad city. And I says, well, I have 2 houses. And I ended up buying one house for $17,000, the other one for $22,000.
Wow.
So
That's crazy.
when you hear those numbers, coming from Canada, I'm going like, what can I buy for $17,000? That's a really expensive. So I went there, I looked at the house. Of course, the houses are 100 years old, but it's still a house. It's a single house that you need to do some work, but the price is just like unbelievable. So I ended up buying 2 properties. And what happens, it was all good. So he put a tenant in one. And then I had another tenant that he put on the second one. So the first one, the tenant ended up, getting the house in bad shape, didn't pay. But I was thinking, like, why is this happening? Because it's not happening to me in Canada. So I went to see the house, and this guy was not doing the right job. And this is
Mm,
one of the things that I want to tell people, that if you have a good property, no matter what it is, if you have a bad contractor or a bad property manager, then that property could turn out bad pretty quickly. So I ended up firing him. I sold one of the properties and then I kept one. And after that, I said, well, I can't really do this going back and forward and me trying to manage everything from far. So I said, I'm just going to sell it. And I talked to the tenant and I said, listen, I'm going to be selling the house. And she said, no, no, please don't sell it. We really like it here. It's close to everything. And I said, well, would you be open to buy the house? And I says, well, but I don't have a lot of money. My credit is not good. So making the long story short, I put her on a lease to own.
okay.
And that was the best thing that I did because I didn't have to worry about the maintenance of the property. It was as is.
Hmm.
I increased the rent. And that property, when I bought it, it was 22,000. I put about maybe $20,000 in repairs, and she ended up paying $1,000 a month. Like, it was unbelievable cash flow for me, right?
Yeah.
She stayed there
Yeah.
for 3 years. So I paid the house, at least once with that money, with very minimum maintenance cost to me.
Hmm.
So that's how I got started. Then I had a partner coming from Canada and we started buying houses at auction. And that was actually really fun. We raised some capital and did that until the pandemic happened, right? And we
Hmm.
could not cross the border. So we were going back and forth and it was pretty good. And then the pandemic changed everything. We actually end up doing a couple of transactions that we had on the go remotely because we already had a team, people that sell the property, all of that. And so we ended up having only one property left. So by the
Okay.
time we came back in about 2023, he said, you know what, I have some personal issues. I'm not going to be able to continue the business. So I bought him out and I continued starting to do flips and renovations. Lately in 2024, then I applied for my E2 visa and I got it. And now I am full time in Cleveland doing renovations. And the one thing that I added at the end of 2020, well, last year at the end, mid 2025, was the renovation company. And the reason is because there's so many contractors out there that they don't show up. And I'm telling everybody, I'm better than anybody because I know I'm going to show up. So
Hmm.
with that alone, it's what is happening right now. So I am pretty excited because there's a lot of business. There's a lot of need for having a good, reliable contractor in the
Yep.
area. So that's
Yeah, no,
almost
that's
5 minutes.
yeah, so that's incredible. And just for those listening, because I know you're talking about buying houses for 17 grand and 22 grand. Um, that was between 2016 to 2018, you said,
18,
correct?
yes, that's correct.
Yeah. So the prices have went up, and we still do get some investors that can find in and around the Ohio area, houses for 30 grand. So I'm assuming you bought these cash, right? Because I know on
Yes.
the lending side, to get a loan on properties that small, it's not really possible. So
At
yeah.
that point, Scott, when I first got to Cleveland, everything had to be cash. There was no way because I had no credit, no, absolutely nothing. So you couldn't really buy with a mortgage. As we went along after the pandemic, everything changed. So a lot of lenders started to come in for out of state and out of country investors that wanted to buy in Cleveland. And now there's a lot more opportunity for people to come in. They don't even have to come. They don't even have to have status in the country to get
Yeah.
lending.
You're right. You nailed it. And for those listening, so before there was ITIN mortgages, right? Which you have to get a US individual tax identification number. That's what that is. And then you could buy, but now it's flooded with DSCR loans, which you don't even need a US tax ID. It's suggested to have a US entity to close in. And I will say, just for those listening for the financing, because I know a lot of people hear this, right? And especially if it's a Canadian, right? Now, you talked about buying in Hamilton for 180 to 300. Now you're 500 and above. Do you know what I mean? So hearing these numbers, they get excited. But I think if you're going to buy in Cleveland, I would suggest a minimum purchase price of 100 if you want to get a loan on it. If you've got enough cash or line of credit in Canada where you could buy the property cash, and obviously buy anything. But if you want to get a US loan, because usually for foreign nationals, the minimum loan size is $75K. So 100, like it works. But just to share that insight, but that's incredible on your story. So you've talked about two things that are really cool. So obviously you've built this up, but then you've built a contractor team too. And I think that's important because a lot of investors, that's the hardest thing, is them taking the first step. And I know we discussed this, prior to even recording this. It's that first step, because they could be lacking trust in their team. They could be lacking information that they need to move forward, where again, if they had a proper team that have that information. So I love that. And I don't know, I don't want to ask you questions that maybe you're not comfortable answering, but how many properties have you worked on in the States? Do you mind sharing that?
Right now I'm in my number 20.
Okay.
So I had one rental, and I've been doing most of them flips because I was going back and forth. So I didn't really want to have a rental until I was in the US full time. But I wanted to actually add something to what you said about the minimum 75,000 mortgage. And what I recommend, if people want to come in to the Cleveland area, the very first thing that you need to know is be familiar with the areas. There are a ton of places that you can buy for 50,000, 45,000, but this is what the problem is. You need a ton of rental, and now the biggest thing in construction is that the material has gone up exponentially, almost double after the pandemic. So that is what people don't really kind of grasp anymore. And if you are going to buy a property that is in the area, like if you are familiar with the grading system, D and below, you get a house for very cheap, but you still need to put a lot of money. And sometimes that money doesn't even, like, you go past what the ARV is, which is the after repair value. So in my opinion, for what I've seen, I don't recommend anybody to buy anything less than 100,000. 100,000 and above is kind of like the sweet spot for rentals, because you still cash flow, you still have a good area where it's going to appreciate, instead of going into the areas that are really dilapidated, that is going to take forever to appreciate, and it's going to cost you a whole lot of money into repairs. So if you want to sell within the next 2-3 years, you're actually going to be losing money. So that's why I'm kind of, you kind of have to go in that sweet spot.
Yeah. And, I love that you mentioned that, because we didn't rehearse that. We're both coming out saying 100K should, be the value. So that's cool. The other thing too, that you mentioned that I will touch on, right, is we have a lot of investors that do the fix and flip loans. Even our staff is doing them.
Mm-hmm.
Like, as we speak, we have deals going on. Like, this is our world, right? So, okay. So what you described with that low purchase price, but then really high renovations, the lenders call that an upside down loan. And that's where your renovations are more money than the purchase price. And, fix and flip loans, especially if it's a first time investor, it's harder to find them in the States. Once you've completed a deal, the world opens up and there's tons of lenders. But those upside down loans, there's only just like, I could probably count them on one hand, the amount of lenders that will approve it.
Uh-huh.
So if that is something that the investor's targeting, then, their rates, their fees, like all that stuff, it's going to be really, really high and not attractive. So I love what you're saying. Buy something a little higher, right? Don't put in as much renos, right? Make sure you're under the ARV. You're going to get best terms on your mortgage too, because it won't be an upside down flip loan. It'll be just a regular one. So it's all the way better around like every angle if an investor buys something a little bigger.
So there is,
I love it.
if somebody's listening here that they don't know where to start, there's basically just two things that you really need to be good at. First of all, understanding the ARV. That is one of the things that if you are like, there's a lot of wholesalers, a lot of even realtors, right? That they say, oh, buy this house, it's really cheap, but cheap in what sense, right? Everything is relative. So you really need to understand that maybe it looks cheap to you because in Canada, the prices are really high. But a house that is $50,000, where is it? It's worth $50,000 or not, right? So you really need to kind of adapt to the area and make sure that you understand the ARV, which is the after repair value. And you can work from there, because if you're very good at determining the ARV in that area, then you can work your way backwards. So now the second thing that you need is obviously a good contractor that is going to give you the right repair, the right amount of money, and that doesn't go over budget, because that will blow it out of the water, right? So.
Mm-hmm. No, and that's smart. And I think that's where you come in. And I think the last point that I want to mention here, and then we'll touch on, how people can reach out to you and what you can provide. But I toured one of our clients' properties. She did some videos and stuff, and we did some walkthrough. So if you're listening to this and you want to check it out, it is on our YouTube and all the other stuff. It's there. But he was highlighting the fact that he purchased in a really nice block on that street, and we took a drive, and 2 blocks down on the same street, it was a really, really bad area. So I think that's something to take notice of, is that even on the same streets, like one block can make a big difference on if it's a nice area. And I found that to be true with Cleveland. After he highlighted it to me, I toured the neighborhood alone, like just to see. And yeah, it's nice section, bad section. And it's like that all over the place. So
that's why it's so important to go and look at the borders, right? So one of the strategies that I use is I use the grading systems. So when you know the borders, then you can buy maybe on a C+ area that is adjacent to a B area, because it shows that it's so close to it that you think that you are in the B area instead of a C+. And that's how you get the best value. But if you are on the opposite and you're in C+ and you're on the other side with an F area, then now your property looks worse. And now the value is a lot less. And you're totally right. We have properties that are in certain areas that you can sell for $300,000. You go just across the road, and those properties are not even $70,000. Right. So that's another thing that people have to be aware of, and they have to be careful of, because that something that is close by sold for that money, that doesn't mean that the property in that area will sell for that amount of money as well. Right.
That's right. That's right. And this, I don't know the area like you do, but after seeing it, this property was, I think, in a pretty good location. I mean, it was within 3 minutes from the hospital, but it's kind of wedged in the middle. So it was also 3 minutes from the riverfront, like the really nice area with all the restaurants and where they host concerts and stuff. So it was in the hub, right? And so even in those areas where you think it's preferred, to check that. So I love that. So for you, Araceli, I mean, there's 2 things, right? Like, you help investors that want to get started, but maybe they need a little bit of hand-holding and they want to partner with an experienced person to flip properties or, whatever. So I know there's that you do, and then people can tap into your crew if they're looking to build something. Is that right? Am I missing anything here?
Yeah, no, that is correct. So one of the things that I do, and I've done with several Canadians as well, is that sometimes they don't have a lot of time. They work, they have the full-time job, family and all of that. So they don't have a lot of time. And to me, like you need to have either yourself looking over, or you have to have somebody that has some vested interest in the deal in order for it to make it happen. So I do a lot of deals with people that they are the money partners. So they say, I have the money, but I don't have the time or the skills to do that. So I'll take the money, we'll purchase the property, and I will do everything. So I will take care of the crew, making sure that everything is paid, utilities, everything, right? And then at the end of the day, we'll split the money, like the profit 50, right? So everybody has a vested interest. And so far, everything has worked out really well that way. Now, if they are ready, if there's an investor already that is in Cleveland and does not have someone to renovate their house or has had problems, that's another thing that I can do. I can come in, give you an estimate for what you need, and then help you out with renovations.
That's perfect. That's perfect. So for somebody listening to this and they're like, that's exactly what I want. How do they get a hold of you?
Well, they can give me a call or they can send me an email and just let me know that, they hear this on your show, and
Okay.
then we can talk, find out exactly what their situation is and go from there. Because I believe that, you need to be a good mesh, right? So
Yes.
we need to be together because if you're becoming a partner, then we need to like each other. We need to know that we have the same, philosophy. And if they like what they see, they can come out to Cleveland to I give them a tour, some of the areas that are good, that are bad, what I look for, how I work. They can come and take a look at some of the properties that I'm working on to see the quality of work. And then we can go from there. We can discuss how we can work together.
No, that's great. And do you mind sharing your phone number and email here, or do you want to get it to me after the show and we'll put it in the show notes?
Yeah,
Like,
I can give it to you right now. You can either text me or call me 1-6-272-0163, or via email, which is my name, Araceli, RACELIH.RE@gmail.com. And then just make sure that you tell me that you hear or saw me on Scott's podcast, and then we can go from there, and then we'll just have a chat and go from there and see if there's anything that I can do to help you. Because right now the situation in Canada, it's just there's no cash flow. It's such a big amount of money to get started and buy property and make it cash flow. You basically have to put more than 50% down. A lot of people don't have it, and there's really no reason for it if you don't have to.
Yeah, and I mean, like, I will just touch on that. You're right. It's definitely a lot harder to cash flow. We do see people getting creative. We're seeing a lot of people adding additional dwelling units to their existing properties. We're seeing people switch to multifamily properties for cash flow. So, I mean, there are still ways, but we are seeing a ton of investors, and I would say it's getting to the point where we're actually starting to do more applications for Canadians that want to invest in the States than Canadians wanting to do loans in Canada. So it is definitely increasing. I think there was something like, and don't quote me, I don't know the exact stat. I just saw it online and I don't know if it's accurate either, but it was something like $60 billion they projected left Canada last year for investment into the States. Like just a massive, massive number. So please fact check that. Like if you're listening, like I don't know if that is the number, but like that is what I read. And if that's true, I mean, that's massive. And that's just 1 year, right? That was Trump's first year of saying, hey, we have tariffs now, but he's still going, he's still pushing on it, right? So who knows what's going to continue to happen.
Yeah,
So
the
we'll see. But
politics, but right now I don't watch the news too much because sometimes they get distorted and it's not really a good fact, right? So what I need to do is just concentrate on what you can see, what you can control, right? And what you can be good at. And I think the opportunity for Canadians is huge right now, especially because the lending has been open and you don't even need a lot of experience in order to do it. If you are able to know where to buy, how much to buy it for, and what kind of rentals to do, then you're good, right? And the opportunity is still there, even though the prices went up significantly just as well. But the opportunity is there. You can't find anywhere that cash flow in Canada for very little money, right? So the last property that I bought is a multifamily that is a 2 unit. I added another unit in the attic, and my 2 units is paying me $2,200. So it's $1,100 per apartment. I bought it for 95,000.
See, that's awesome.
So you can't beat that, right? And of course, it's an older house. You have to put some money in it. That put about $30,000 to get it up to rent ready. But the numbers still work. It's just amazing. So, and those are the things that you need to look for. That's what you're looking for minimum amount invested, right?
Yep. Yep. No, I agree, and I think that's incredible. So we'll wrap up for now, but I'll make sure your details go out in the show notes so everybody can reference that. If you're driving and you can't, take notes of Araceli's phone number or email, it will be in the notes. But thank you so much. I loved hearing your journey and your story. I think it's super cool, and it's one that, believe it or not, it's one that is duplicatable. Like, someone else can do this. Do you know what I mean? It doesn't take as much capital, like you said, that Canada would need. So, we are having investors that are not qualified in Canada go to the States just because they can get something, right? And something's better than nothing. So yeah, I love it. Thanks again for joining.
Absolutely, Scott. Thank you very much. And if you do have any other question or you want to know anything specific about the area, I'll be happy to come out and talk about it. I could talk about it forever.
That's awesome. Well, again, thanks so much. And for those listening, if you enjoyed the show, please like it, follow us, and obviously share it with your friends. Thanks so much. Take care.
That's awesome. Thank you, Scott.